I still think that the Fed and most market participants are underestimating the gravity of our situation.
The bottom line is the Bitcoin strategy is 10x better than any other alternative. And so no, I don't regret it.
I'm not going to, ignore the fact that we're facing some challenges, but actually the outlook remains very, very positive.
I'm using every lever available to me to bring down prices for the American people.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha for the Qatar Economic Forum, and here's what's coming up on today's program. All in, the Fed's Christopher Whaler says he would support another 75 basis point hike, saying the U.S. central bank will do what it can to reestablish price stability. Crypto on edge. Bitcoin struggles to hang on to the $20,000 handle, continuing its recent free fall amid current volatility. And in France, Emmanuel Macron loses his absolute majority in parliament after an unexpected surge in support for the far right. So I'm in Doha for day one of the Qatar Economic Forum. Plenty of interviews coming from the conference in the next couple of days, including Standard Chartered's Bill Winters, VW's Herbert Diess, and Boeing's David Calhoun. Now, plus on Tuesday, we'll also be speaking to the Tesla chief executive, Elon Musk, so you don't want to miss that conversation. Now, last week was a big one for markets as we saw further tightening of monetary conditions. Here's what central banks and politicians had to say about the inflation problem.
In the sense of the outcome of our forecast, yes, we've underestimated inflation.
The recession risks are going up.
We've had high inflation in the first half of this year, and that locks in high inflation really for the entire year.
My colleagues and I are acutely focused on returning inflation to our 2% objective.
I'm using every lever available to me to bring down prices.
The Fed is all in on reestablishing price stability.
And our nations are working together to stabilize global energy markets.
If we do see greater evidence that the current high level of inflation is becoming embedded in pricing behavior by firms, in wage setting behavior by firms and workers, then that will be the trigger.
I still think that the Fed and most market participants are underestimating the gravity of our situation.
Well, joining us now is Catherine Yeung, Investment Director at Fidelity International. Catherine, thank you so much for joining us. Last week, we were worrying about monetary policy and inflation. This week, we're worrying about monetary policy, inflation, and China. How big of a concern is China right now?
China has been a concern for global investors year to date because of the slowing economic growth we have seen out of the country, which really began last year. But year to date, really, the lockdowns that we've seen in various cities and provinces in China have caused some concern for investors because you've basically seen a lack of movement, so impacting consumer sentiment, potentially seeing disruptions to the supply side. But worth highlighting that China is in a very different position versus the rest of the world, especially when we look at policies, whether it's the COVID policy or indeed monetary and fiscal policy. So China's in a position where they can ease. They are tweaking. The market was expecting more or hoping for more, but they haven't. So it puts them in a different scenario. Also inflation, it's relatively benign in China versus what we're seeing around the world.
So, Catherine, overall, what does it mean for where you want to be invested in? If you look at some of the dislocations that we saw last week, is it symptomatic of something still worse to come?
Well, if we look at China in particular at this point in time, the market, the economy, they're probably one cycle ahead at this point. So technically the business cycle is probably in its low. So seeing earnings probably bottom in the second quarter. Not saying there's going to be a V-shaped recovery. In fact, it's probably more likely to be a gradual recovery. But again, because of that policy bias, i.e. the ability to add some form of stimulus, both monetary and fiscally speaking, we do expect to see China, relatively speaking, outperform other markets. In terms of the rest of the markets, though, anecdotally, companies are saying that the declining purchasing power, at the same time, higher cost push inflation is causing them to be very cautious, and earnings are likely to continue to be derated going into the second half of the year.
Is there a danger that we actually see an earnings recession, even if the world economy is not hit with a recession, or even if the U.S. doesn't go into recession? And what does that mean for where you want to be invested in stocks?
Yeah, earnings generally across the board, not just China. I mean, earnings visibility is somewhat of a scarcity. So if you have the ability to have those earnings coming through, then likely you'll be rewarded by the market. That coupled with, for example, and again, I'm going to use China in this sort of example, is the yield or the dividend yield and the dividend policy that many companies are paying out. So it can act as a bit of a cushion in this period of volatility. But yes, certainly we do expect this skittishness to continue. And again, across the board, earnings to be derated or be put under pressure.
So are you expecting the dividend yield story to continue staying strong in China? And what does that mean for your investment strategy in the country?
Yeah, I mean, it's something that investors don't really recognize or often highlight. Australia, yes, definitely a market where you do expect to see that income coming through. But the fascinating sort of direction that the Chinese companies are going through, one, it's under their corporate governance code in terms of maintaining a good dividend policy or a standard of dividend policy. But if you think of the rising local investor base, so that need to diversify away from property in terms of the household assets, away from just putting it into a deposit account, you need to see the growth and evolution of the capital markets. And this is why it's not just about potential capital appreciation over 2 weeks. It's about the long-term viability of owning stocks, equities, or fixed income, and hence this yield bit comes into play.
But Catherine, your big bold call is really that Chinese stocks look also more attractive than most parts in the developed markets. Are the risks though increased if they go into protracted lockdown, if they stick with COVID zero policy, and also if there's more regulation coming?
So in terms of the cyclical headwinds, the COVID policy and the zero COVID policy has seen this slowing economic growth. The regulators, the government has come out with a 33-point agenda in terms of areas that they want to add sort of stimulus. And so that's important. Again, from a balance sheet perspective, they do have the tool set. Regulatory-wise, we've probably seen the peak of surprises. And so think of the regulatory period last year, which a lot of that is now priced in, as just continued news flow from those main areas. So common prosperity continues to be a key area regulatory-wise. But again, we don't expect to see any big shocks or big surprises come through from that perspective. So all up, from a valuations perspective, a lot of the negative news, especially from last year, has now been priced in.
Catherine, and I know, for example, Bitcoin fell off a cliff over the weekend. I mean, there seems to be very little safe spaces across everything. How do you hedge with gold, or do you hedge with yen or something else? Like, how's the currency space going to look like?
Yeah, the currency is very interesting to watch. And even gold, you would have thought, given the inflationary pressures, that it would have risen a lot more. So again, it goes back to that earnings visibility. And I think, talking about this potential derating that we could see with companies, it's about ensuring that your supply actually equals the demand, the intended demand, not the intended demand of when households had all this free money or that transfer of funds from the national balance sheet to the home. And so once that free money goes away or taken away, inflationary pressures, the health of the labor market, this is what you need to consider as a company to ensure that your strategy remains intact and hence your earnings can come through. So it's about diversification, but again, having that income cushion, and China, because it's such a diversifier, is still attractive.
Catherine, thank you so much. Catherine Yeung, their investment director at Fidelity International, joining us, of course, on the big market moves that we saw in the last couple of weeks. And then Bitcoin. I mean, we just showed Bitcoin. It's really pretty incredible. Over a 6-month chart, what Bitcoin has done. Coming up a little bit later in the program, the airline industry, of course, also struggling to cope with the resurgence of demand for travel. We speak to the Air New Zealand chief executive, Greg Foran, live at IATA's AGM here in Doha. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha for the Qatar Economic Forum. Now, let's take a look at some of the key events happening this week, and there are a lot of them today. U.S. markets are shut for the Juneteenth National. In Europe, ECB President Christine Lagarde speaks at the European Parliament in Brussels. It comes, of course, days after officials announced a new tool to prevent an excessive divergence in borrowing costs across the Eurozone. Then on Tuesday, it's the start of the Qatar Economic Forum, powered by Bloomberg. Inflation will also also be back in focus on Wednesday as we get the latest CPI print for the UK. And then Bloomberg Economics expects price pressures to edge up in May from 9% in April in the US. The Fed Chair Jay Powell kicks off 2 days of testimony on Capitol Hill. On Thursday, EU leaders convene in Brussels for a 2-day meeting. And finally, on Friday, we get more UK data with retail sales, for example, expected to slow down as consumer confidence hits new lows. Now let's get straight to the Bloomberg. First Word News in London is Laura Wright. Hi, Laura.
Hi, Francine. President Emmanuel Macron's centrist alliance has lost its outright majority in the French parliament. Macron's group won 245 seats short of the 289 needed for an absolute majority. A left-wing alliance will be the second largest bloc, with the far-right National Rally in third, claiming 89 seats. The result means Macron will struggle to pass legislation, putting much of his economic agenda in peril. President Volodymyr Zelensky says Ukraine is facing a historic week as EU member states are asked to sign off on its bid for candidacy status to join the bloc. Meanwhile, as grain harvests get underway, the war-torn nation is warning output may shrink by more than 40% this year because of Russia's invasion. The UK is bracing for a week of travel disruption after efforts to avert a planned rail strike failed. Trains will be disrupted in 3 days of walkouts starting tomorrow as 40,000 staff hold the country's biggest train strike in more than 30 years. Separately, Londoners will be hit by a walkout on the city's underground network in another labour dispute. The German government is to step up efforts to bolster gas storage levels after Russia reduced flows to the country. A state-owned lender will make available additional credit lines available to guarantee gas injections. More coal plants will also be fired up to reduce natural gas use ahead of the winter months. China is sending teams to central and eastern parts of the country as soaring heat and a lack of rainfall threaten to hamper summer planting of corn and soybeans. Temperatures as high as 40 degrees Celsius in Henan, Hebei and the Shandong provinces are drying up soil, making sowing difficult. That comes after many Chinese farmers reaped a bumper harvest of winter wheat. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thank you so much. Laura Wright in London now. I'm in Doha for day one of the Qatar Economic Forum. Plenty of interviews coming from the conference in the coming days, including Standard Chartered's Bill Winters, VW's Herbert Diess, and Boeing's David Calhoun. Plus, on Tuesday, the big one, we'll be speaking to the Tesla chief executive, Elon Musk. So don't miss that conversation. Now, coming up, the airline industry struggles to cope with the resurgence of demand for travel. We'll be speaking to the Air New Zealand chief executive, Greg Foran, live at IATA's AGM in Doha. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha for the Qatar Economic Forum. Now, leaders of the aviation industry also gathering in Doha for the IATA's annual general meeting here in Qatar. Now, it comes as the sector struggles to cope with the resurgence of demand for air travel. Let's get straight to Bloomberg's Guy Johnson, who's at the event. We briefly had dinner, but then he had to go and hang out with the celebrities, and he's joined by a guest. Guy.
Yeah, that's the big story. We'll deal with that a little later, Fran. Let's talk a little bit about what's happening right now in this airline industry. Greg Foran is the CEO of Air New Zealand. He took over during the pandemic. He's had a fairly interesting ride as a result, and we've now got plenty of challenges to deal with. Air New Zealand is coming out of this in fairly good shape in some ways, but you had a fairly difficult lockdown, Greg. You completely shut down New Zealand. You've had domestic shutdowns to factor in as well. Where are you now in terms of bringing this business back? Where are you in the recovery phase?
Yeah, we're moving quickly. So we were a bit slow out of the blocks, but come April the 14th of this year, we were open to Australia. We then had visa waiver countries open on the 1st of May, so just 2 weeks later. Pre-departure tests have now disappeared as of tomorrow. So quite quickly, we're seeing, a rebound in travel. And not just travel for people leaving New Zealand to get out, but increasingly people wanting to come back in. So I'm really excited by the speed of, that we're seeing in terms of the recovery.
It's a beautiful country. I can understand why people want to come and see it. The rugby's pretty good, I hear, as well. Let's talk a little bit about the two sides of that, supply and demand. Let's start off with the demand side. There is clearly, as you say, pent-up demand. People want to travel, people want to get out, people want to get in. How long does that last? How sustainable is that phase, do you think?
I'm not sure. It's a simple answer. And the reason for that is we're dealing with an environment that we certainly haven't seen in New Zealand, and I suspect most haven't. You've got a situation here where people have built up savings, but you're also dealing with inflation rates that we haven't seen. That's driving to higher mortgages. So, at what point does a fare increase start to impact on the degree that people are going to travel?
So how close to that point are we, do you think? Fares have gone up because fuel has gone up. You're also having to deal with staff shortages as well. So you're a bit supply constrained in terms of your ability to bring this capacity back on. How far away is the point where fares actually start to drive demand destruction?
We haven't seen a move yet, and we're seeing fares generally in New Zealand up around about 20-25%. But I'm not sure is the answer to your question, because the environment is so different.
Yep.
So, what we're doing is, if you like, being bold in thought but cautious in deed. Let's just be sensible about how we bring it back. Let's keep a close watch on what's happening and adjust and move just as we've had to over the last 800 days.
Have you got the staff you need?
We are. We're being quite, sensible about how we're bringing people back. We've, got a good brand. A lot of people that we unfortunately had to let go, about 85% of them, very keen to get back. We've brought back almost 2,000 people, so about 20% of our workforce.
That's a long way to go still, though.
Oh, absolutely. And I don't think this happens quickly. So, I'm not deeply versed in all things airline, having not grown up in the industry. But my sense is this is a good 9 to 12 months of building back real robust capability, whether you're talking about airports, whether you're talking about crew, whether you're talking about engineering and maintenance. So there's a degree of patience that's going to be required. And importantly, you just don't want to restart the way that you finished.
Yep.
All of us actually want to be better.
That kind of timeline you're talking about obviously is a relatively long one. The economic conditions are changing rapidly right now. Central banks are raising rates aggressively. They clearly want to tamp down demand. Is there a danger that actually you end up kind of effectively raising capacity into a recession?
Yeah, I think there is a risk that that happens, and that's why I think, we can be bold in thought, but let's just be a little bit cautious indeed, because it would be such a shame to suddenly find ourselves with too much capacity and either having to pull that capacity out or drop prices in an environment where one of your largest input prices is now double. So, the cost for me to fill up a 787-9 and get from Auckland to LA has gone from $42,000 US to $96,000.
So it's more than double.
More than double.
How is that something you think is going to stick? It's very hard. The forward curves at the moment are pointing to relatively elevated fuel prices for quite a long time.
That's how we're thinking about it too. I can't predict any better, I think, than anyone else in terms of what's going to happen. And there are obviously external forces at play here. But once again, we just need to be a little bit cautious, because if it is around for a while, then, these prices do actually need to be passed on, unfortunately.
The industry obviously as well has to, while this is all going on, make the shift to being more carbon neutral. How inflationary is that going to be? Adding on to, so where we are now is jet fuel's come up. It was about 4 times cheaper than sustainable aviation fuel. Now it's about half as much. But nevertheless, we've got to make that shift. That's going to be inflationary as well. How do you factor that in?
Well, the first thing I'd say is what a wonderful time to be in the aviation industry, isn't it? You've had sort of 800 days of the industry being turned upside down. Now we're restarting, and we've got so many things coming at us. As you say, whether it's the price of fuel, whether it's to deal with stagflation, whether it's to deal with sustainability. So you've got to craft and navigate a way through all of these things. They're not going to go away. They're wicked problems. Yep. You're probably not going to solve them just in aviation alone. So this is going to be a case of, I think, private and public working together, both those sectors working together, and coming up with new ways of working to solve problems that are truly wicked problems.
Yep. I can't work out if you were sort of saying it's a wonderful time to be in the aviation industry, whether that's slightly tongue-in-cheek. But
no, actually, I'm serious.
Okay.
Because it's in periods like this that the greatest change occurs. And, you know, I think we will see that. I suspect if we came back to Doha in 10 or 15 years, I think we'd say, what a period aviation has been through.
Great to catch up. Nice to see you. Thank you very much indeed. Greg Foran, the CEO of Air New Zealand. Fran, we are having a great day here at IATA. We're all looking forward to the gala dinner a little bit later on. Back to you.
I know, and apparently there's a big celebrity at the gala dinner, so I'm going to try and be guys plus one, otherwise he'll tell me all about it. Coming up, we'll look at France and Emmanuel Macron's, of course, voting over the weekend. This is Bloomberg. All in, the Fed's Christopher Waller says he would support another 75 basis point hike, saying the U.S. central bank will do what it can to reestablish price stability. Crypto on edge. Bitcoin struggles to hang on to the $20,000 handle, continuing its recent free fall amid current volatility. And in France, Emmanuel Macron loses his absolute majority in parliament after an unexpected surge in support for the far right. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar, for the Qatar Economic Forum. Now, we have really some wonderful guests lined up for you here in Qatar. Day one, plenty of interviews from the conference in the coming days. So this is what's coming up exactly. First of all, we have Standard Chartered's Bill Winters. We also have VW's Herbert Diess, Boeing's David Calhoun. Plus, on Tuesday, we'll also be speaking with the Tesla chief executive, Elon Musk, so you don't want to miss that conversation. Now, the French President Emmanuel Macron's centrist alliance has lost its outright majority in parliament, and that, of course, follows the weekend of parliamentary elections. Now, for more, we're joined in France by Caroline Conan, who's been covering the election very, very closely. So, Caroline, what are the results of this runoff, and what does this actually mean for Macron? Why did he do so badly?
Francine, there was a lot of thunder and rain last night in Paris, and it is a major blow for Emmanuel Macron. Some called it an earthquake, a massacre for the first time in 20 years. A president who has just been elected 2 months ago does not have a majority at the National Assembly that you can see just behind me. Emmanuel Macron fell short of the 289 seats he needed. He actually fell short of 44 seats, which is quite significant. And the NUP, the far left-wing coalition led by Jean-Luc Mélenchon, got 131 seats, which means that they are becoming the main opposition party. And Francine, the NUP is actually a party that defends proposals such as increasing the minimum wage or transforming the debt held by the ECB into zero-coupon bonds. But the biggest surprise, Francine, from last night actually came from someone we had almost forgotten, Marine Le Pen. Usually the two-run system makes it very difficult for the far right of Le Pen to get a lot of MPs. This wasn't the case last night. The national rally got nearly 90 seats, which is a historical record. Their last record in 1986, they only had about 35 MPs. So clearly a big victory for Marine Le Pen. Emmanuel Macron will be stuck between the two extremes and will have to form some very fragile alliances and fight on every bill and reform.
So, Caroline, what does it mean that Emmanuel Macron can actually get done in the second term?
So it will be much more difficult than during the first mandate because he will have to form these alliances. And clearly, this could undermine investor confidence and rise France's borrowing cost, which is actually a very difficult time at a time of rising interest rates environment. And of course, the very high level of French debt already, which is above 110% of GDP. So this might be much more challenging for Emmanuel Macron. He wants to pass first the pension reform, raising the retirement age to 65, but the far left has the exact opposite view. They want to lower the retirement age to 60. So we could see some yellow vest type of protest in the streets, and it's going to be extremely difficult to govern like he did during the first mandate.
I mean, it's very clear that the leftist coalition is second and there's a large gain for the right. What happened that didn't happen in the presidential election?
So clearly the two-run system means that locally you had a lot of battles between, on one side, the national right and Macron's party, and on the other side, the far left and Macron's party. And what happened with this far right wing is that a lot of people who actually didn't want to see Macron having a majority actually voted for the national rally because of that. So clearly this is historical for both the far left and the far right. This is something we've never seen before. We have a situation which is similar to the late 80s with Michel Rocard, who had to really battle to pass any kind of reforms. It's a situation that is close, Francine, to what we could call a hung parliament in France.
Caroline, thank you so much. Caroline Conan there with the very latest of what's happening in France after those legislative elections. Now, coming up, Germany steps up efforts to bolster gas storage levels as Russia squeezes flows into Europe. We'll have plenty more on the energy cost. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in Doha for the Qatar Economic Forum. Now, it's the second annual Qatar Economic Forum, powered by Bloomberg, and global business leaders and heads of state are convening in Doha to tackle some of the world's most pressing challenges through the lens of the Middle East. Now, let's get straight to Manus Karani, who joins us here in Doha. Manus, I'm so excited, actually, that we get to speak to each other in Doha. And this is really your region. You're an expert in the region. We'll talk about energy. We'll talk about how, this region is also transforming.
I think there's a huge shift here. We are in the land of plenty of gas. And the Qataris have already sort of reached out globally to Total and Claudio Descalzi. He didn't give me an interview yesterday, but he was here. And so really gas, we're at the epicenter of gas. Who's going to be part of that gas transition? For Europe, it's a long-term solution. It's not for the eye of the storm now. But I think we're going to debate 3 E's. I think we're going to talk about the energy transition and the crisis. We're going to talk about the exogenous shocks, and we're going to debate recession within an inch of our lives.
And I guess how they deploy all this extra cash, right? So, I mean, if you're sitting in the Gulf right now, you're making a pretty big windfall.
There's been a huge flow of money. The door's closed to Russia. So a great deal of emerging market money flowed from that traditional avenue route into Russia, here into the Middle East, whether it's to Saudi, the largest equity market, or indeed to the Qatari banks. There was this flow of money and this flow of funds. We forgot the third E, Elon Musk.
We're so excited because he's speaking to us, to our editor-in-chief tomorrow.
He is. And the reason why I want to sort of dovetail with that is he is already talking to the Qataris, you understand, for 300 million, a third of a billion. I think a billion sounds much chunkier than 300 million. So he's trying to get...
This is what, for Twitter?
For Twitter. So, why not? This is the perfect platform. Come, talk a little bit about Dogecoin, Bitcoin, and maybe even, where your funding stands on Twitter and the great debate.
We're going to be watching that interview. That is, without a doubt, the interview of the week. Manus, I'm looking forward to actually just, talking markets with you and catching up.
We're live.
We are live. Manus Karani joining us there live from the Qatar Economic Forum. And Manus starts way earlier than me, so tomorrow morning, watch him at 6 a.m.?
I have breakfast much earlier than you.
There you go. And he's on air to bring you all of the news much earlier than me as well. Now, from the London of Plenty of Glass, let's discuss its lack in Germany. It's to step up efforts to bolster gas storage levels as Russia squeezes flows into Europe. The country's economy minister, Robert Habeck, says there are also plans to fire up more coal plants to conserve natural gas. Well, joining us now is Will Kennedy with the very latest. He is Bloomberg's executive editor for energy and commodities. So, Will, first of all, what is the latest on Russian flows into Europe?
They remain constrained and gas prices remain elevated. Flows to Germany's biggest gas customer, Uniper, have fallen by as much as 60%. And I think there's real concern that they could get worse. Everyone's watching to see what Russia does, and there's a real concern that those flows at some point may fall further. What this means for Europe is that there was a certain amount of optimism about how far we'd be able to fill our gas reserves this summer as we prepare for what's likely to be a tough winter ahead. Gas reserves had been filling up, both on Russian gas and LNG imports, but with these lower flows, those calculations are quickly being remade.
So, Will, where are we on Germany's plan to ration gas?
Yeah, I mean, we had Habeck yesterday talking about what they will do in response, and they've got some ideas about guaranteeing the financing of reserves to try and increase or at least maintain at as high a possible level the flows into storage and make it worthwhile for traders to store gas. But they're also talking about bringing back more coal-fired power plants, and it's an amazing thing that for the first time we have a partly green government in Germany. Habeck, of course, the leading member of the Green Party, has campaigned his whole political life to end Germany's reliance on fossil fuels. And because energy security right now is paramount, they're bringing back coal-fired gas plants that they had been wanting to mothball. But it's worth saying that it's not just Germany. The UK has also said that it's going to operate gas plants this winter, which it had expected to close. Obviously, Britain had gone further than Germany, but in every European country, people are having to look at the pace of energy transition because gas supply is likely to remain so disrupted over the coming months.
So, well, if you look at the price of oil right now, it's stabilizing, but it was down 7% on Friday. So what exactly is happening to these crude prices?
Well, the crude futures market has been very volatile all year, partly because of the flow of geopolitical news. And that scared a lot of traders off. So liquidity is very low. It was low on Friday. And when you get low liquidity, you often get sudden severe moves in price, and I think that's what happened in oil on Friday. Obviously, the macro background was the Fed action last week, which had people worried about how fast the global economy would slow down and what that might do to oil demand. But I think the lack of liquidity in the market probably exaggerated that move on a Friday. Now, what do things look like going forward? I think there is uncertainty about the trajectory of demand because there's so much uncertainty about the economy. But I think it's worth saying that so far demand is holding up very well in some parts of the world. You only have to look at what's happening at the world's airports and people coming back to fly and the pressure that's putting on the aviation system to know that demand is robust. And I don't think there's much reason to think that we've reached yet a big inflection point for the outlook for the oil market. There's been some retracement, but when you look at fundamentals of physical supply, physical demand, things still look very tight.
Well, thanks so much, Bloomberg's Will Kennedy there. Now, let's stay on the energy story, but let's also talk about nuclear. Now, one possible solution to this energy crisis is gaining more attention, and that's the nuclear power startup Nucleo, raising $315 million to help develop technology towards its first pilot projects in France and the UK. Now, the London-based company aims to bring down the development and production costs of nuclear power. So let's get straight to Stefano Buono. He's the founder and chief executive officer of Nucleo. Stefano, thank you for joining us. I mean, there's a lot riding on this to make sure that it works, that it's safe. And so there's also a lot of skepticism amongst the population. First of all, how's funding going? Do you have enough funds? How close are you to making this cheaper?
We are very close because we have been working on that in the past 25 years. And we have learned from the past. We are launching the technology that is the one of our fast reactors. And this technology can be used as fuel the radioactive waste of the current reactors. This technology was tried in the 70s, and sodium was used. This technology was tried in the 70s.
But Stefano,
yeah,
in terms of timeline, so how close are you to actually start a proper operation for this?
We are close, 7 years. We want to switch on our first reactor by the end of this decade.
So, and do you think that the invasion of Ukraine accelerates your plan? Are you seeing more demand, both funding, but also more acceptance amongst governments and policymakers?
I would say yes, because there is a need for energy independence. And also, not only the need is focused on the price. So now nuclear can answer to 3 questions that are very urgent for the population. The energy independence, because You can even just produce without mining anymore, just using the waste that is present in UK. That's very important. Then the cost. We have tried to bring down the cost up to a half of what is the cost of a very big reactors of today. And of course, there is also,
right.
Please.
So how close? So first of all, in terms of technology, how is this technology different from the last one? Is it cheaper? Is it safer? And again, I don't know what the stamp of approval is. What are policymakers and what are the governments telling you about this?
It is safer because we use a coolant that is different, is lead, that essentially avoid any chemical risk to the plant and on which you can deploy passive safety system. So the nature can switch off the reactor in any case of malfunctioning. And even if the operator makes errors, like the one that have created the accidents of the past, almost always been a human error. So the nature does it, physics. So you create what is considered passive safety.
Stefano, how much more funding do you need? What are the next funding rounds and who's giving you the money?
It has been a very interesting moment because I believe there is a transition in this industry, like the transition that happened in the space industry. So private money is flowing into the industry, into good projects. We need still a lot of money. We believe that to launch the full industry, we need 3 billion. So this is just the start. But we have a large group of investors. This is just seed money. And probably we'll have to anticipate our needs of funding already from next year.
All right, Stefano, thank you so much. Stefano Buono, their founder and chief executive of Nucleo. Now, coming up, we'll talk a lot more about decentralized finance communities in a race to protect themselves against a cascade of liquidations, sometimes by employing unprecedented measures. More on the crypto space. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in Doha for the Qatar Economic Forum. Now let's get straight to your Bloomberg Business Flash. In London is Laura Wright. Hi, Laura.
Hi, Francine. Cleveland Fed President Loretta Mester says the central bank's delay in raising rates is partly to blame for increasing recession risks. She told CBS it will take several years to return to the Fed's 2% inflation goal. Her view on slowing growth was shared by U.S. Treasury Secretary Janet Yellen, who told ABC that unacceptably high prices are likely to persist for the rest of this year. Air India is considering buying as many as 300 narrow-body jets in what could be one of the biggest orders in commercial aviation history. Bloomberg understands the carrier may order A320neos from Airbus or 737 MAX models from Boeing, or a mix of the two. The possible move comes as the formerly state-run airline looks to overhaul its fleet under new ownership. The airline industry trade body says the sector will be able to sustain its pandemic rebound even with a global economic slowdown. Speaking to Bloomberg, IATA Director General Willie Walsh says there are headwinds, but the outlook is positive.
There's clearly pent-up demand that is being fulfilled at the moment. But all of the research we're doing, just reaffirms that people want to get back flying again. There are headwinds. I'm not going to, ignore the fact that we're facing some challenges, but actually the outlook remains very, very positive.
And that's your Bloomberg Business Flash. Francine.
Well, thank you so much, Laura. Right now, Bitcoin struggling to hold above the closely watched $20,000 level following a volatile weekend. On Sunday, the token holders of Solend, a lending app on the Solana blockchain, voted to temporarily take over a large user's account that faced a threat of a large liquidation. Now, though that decision was actually reversed in a second vote today, it was an extreme move for DeFi. That appears to be a first. Well, joining us now is our crypto reporter, Emily Nicole. Emily, this is huge. So what's at stake here?
Yeah, so obviously over the last week, we've seen a lot of pain in crypto markets, and those falling prices have in turn meant that a lot of positions across the sector have been getting liquidated, a process in crypto which happens automatically. Bots and traders will be scouting opportunities for arbitrage and picking up those liquidations. And so often there could be a risk of something being immediately liquidated in a way that could affect a blockchain if the position is big enough. That's what happened with Solana and Solend, the crypto lender. A crypto whale, as it's known, an address with a lot of tokens, was at risk of being liquidated. So they overtook that position temporarily to try and mitigate the risk there.
So, Emily, what's going on in the crypto market this morning? It seems to be stabilizing somewhat, but again, from a quite low base.
Yeah, the prices seem to be oscillating around the $20,000 mark for Bitcoin, but it's still very much a sea of red across most tokens today. Some are trying to hold on to the gains that they may have gained over the weekend, but a lot of them are still struggling amid this particular period of real uncertainty for traders. Lenders are still suspending withdrawals. We're still seeing problems at hedge funds in crypto, and particularly with the issue at Solend overnight, there's still no real end in sight for the pain in crypto markets.
Yeah, I mean, the Bitcoin volatility is pretty huge. So what's, powering these moves, or what's behind those moves besides the Solend story?
So overall, as we see positions getting liquidated, that means that traders are having less money available for them to invest in new tokens, buy early, and even just, having confidence in where the bottom of the market is, I think, is a real issue right now. Obviously, we went below 20,000 over the weekend, as low as nearing to 18,000 mark, actually. And that has caused a lot of confidence issues because normally we look at a tracker where you could say if you invest in Bitcoin 4 years ago, you might have made money by the time this 4-year mark comes around. But falling below that mark over the weekend means that's no longer true. That was a key sentiment tracker for most Bitcoin investors and showing why it's something worth buying. And so looking ahead to today, if you can't rely on that, then what is the purpose of buying Bitcoin now? You'd have to ask the bulls, I guess, like MicroStrategy and others.
Emily, thank you so much, as always, with all of the insights. Emily Nicole there, our crypto reporter. Now, we're here in Doha, of course, in Qatar for the Qatar Economic Forum. It's day one. Plenty of interviews coming from the conference in the next couple of days. Now, we have Standard Chartered's Bill Winters, VW's Herbert Diess, Boeing's David Calhoun. I'm also doing a pretty good energy panel tomorrow with the Exxon chief executive. Then tomorrow also we'll be speaking with the Tesla chief executive, Elon Musk. That's a conversation that our editor-in-chief, John Micklethwaite, will do. They'll talk Twitter, they'll talk Tesla, and of course they'll talk about some of the Qatari money going into funding the Twitter deal. Now, Bloomberg Surveillance continues in the next hour, of course, with Matt Miller and Katie Lyons in New York, Anna Edwards in London. For the moment, stocks in New York pretty much steady. Again, this is after the biggest sell-off in a week that we had. U.S. futures actually gaining a touch as well. Investors assessing the outlook for economic growth, but also concern about monetary tightening. This is Bloomberg.